Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 323 today, and we want to talk about opportunity cost. So, opportunity cost is something that we ignore in our usual investing calculation, but it is very, very important, and I'll show you why later in the episode today. I'm sorry about the noise outside, the construction is incessant, but I can't really help it at this stage. Markets were a terrible day today in terms of continuous fall after the Fed meet last night. Fed raised by 0.5%, but have not given any dovish outlook for the next many months, and they will continue to raise till at least 5.25%, and then the mandate still remains that the target of inflation should be 2%, which is nowhere in sight. So even at 5 and 5.25% next year, early next year, there may be a consensus to do more, and that has spooked the market. Uh, all emerging markets down, US futures down, IT stocks losing the most at 2.1%. PSU banks that had been running very hard took some profit booking today, minus 1.9%. Metal stocks also down 1.4%. Overall, Nifty down 1.3%. And you can see that no sector was spared in today's session. Broader indices, they held on for half a day, small caps and mid caps, but later on succumbed to the overall pressure. So, along with Nifty's loss of 1.3%, CNX 200, CNX 500 also lost 1.2 and 1.1%. Nifty Next 50 lost 0.9%. Mid and small cap index lost 0.75%. And small caps still losing less than others, showing relative strength at minus 0.4%. In terms of weekend investing strategies, all strategies were in the red. MI20, MI Evergreen, MI25, MI NNF10, ATH2 all losing 1.4 to 1.8%, and others between 0.5% and 1.4%. There was no where to escape the wrath today. Heat map for the day is all heat. There is no green. You can see bright reds at Tech Mahindra minus 4%, Titan minus 2.5%, Coal India minus 1.7, ITC minus 1.9. Most stocks you can see were between 1 to 2% lower, including HDFC Bank, ICICI Bank, Bajaj, Finserv, HDFC, State Bank, TCS, Infosys. There was no place to hide here either. So a huge sell-off day. It may also mean that we may not be making a new high in the current calendar year, as the holiday season is also upon us in next few days. So this fall today may be an indication that for the next some time, this may be a top that we've made. Fertilizer and chemicals up 20%. So most fertilizer stocks were running today. Insurance stocks were running. General insurance up 11%. Mahindra CIE up 9.7%. IOB, odd one out, up 7%. GSFC up 6%. In terms of the losers, IRCTC with the follow-on offer coming for IRCTC at a huge discount at around 680. The current price was at 734 and that corrected minus 6%. Bank of India, Tube Investments down about 5% each. Profit taking here, Med Plus Health down 4.8%, and GE Shipping with shipping rates coming down also down 4%. So opportunity cost is something that is very, very important in a portfolio setup. Usually, what happens is that we will buy a stock. Let's say we bought a stock at 100 rupees, it went to 500 rupees, and now it is down to 300. And now we are waiting for that stock to go beyond 500 at some point, and it takes its own sweet time. And sometimes it does, sometimes it doesn't do, and we are waiting for 5, 7, 10 years sitting with that stock, and ultimately we lose patience and sell off the stock at 300. So we may have made gains 100 to 300, but the same gain was available in the first year itself, and the next 6 years didn't add anything to the to the portfolio. So had we gotten out at 300 at the end of the first year, you would have had that capital available to you for the next 5 years to use. Even if you had made nominal index returns, you would have still doubled your money. So this is what happens usually when stocks make phenomenal runs, and we get caught at some price, and then you are mentally anchored at the high, and you don't want to sell at the lows, or lower than the highest price, and that's what creates the problem of the opportunity cost. So this is an example of HFCL. I know this is not the best quality stock. Not everybody would have bought this stock, but if you go back in history, HFCL was very very popular in 2020, 2009, 2000, and this is a 30-year chart. So you can see today it trades at 82 rupees, the same price where it was in about 1993. So a 30-year buy and hold would have gotten nothing out of it. But in the meantime, from 80 it had gone to 2400 in 99 2000, and then it collapsed back to about 10 rupees. So question is that if somebody had bought it, let's say at 1000 rupees or 500 rupees, and stock went up 5 times from there, from 500 to 2500, and then it has collapsed back to 100 and then 10 rupees, how long will you wait for it? So it was an irrational run, and then it may have been an irrational collapse between below, let's say, a certain price. And markets and stocks can remain irrational for very long, but we have a very finite life. Our investment journey cannot be infinite, so we need a plan of action. So you cannot endlessly wait and lose the opportunity of your money. Even if somebody bought here, at 100 rupees after this fall, even then he has spent 10 years waiting for that 100 rupees to come. Now we are at 82. So after 10 years, if 100 rupees has become 82, you're still down and you've lost 10 years of opportunity here. Same is the case with the very good quality stock Infosys, where from 98 mid to 2000 it went up 5000%. So 50x was the move in 2 years' time. Uh, and then in the next 18 months, from 2000 to 2001 September, it lost 86%. So just imagine the kind of moves that can happen in a stock. And you may have entered at any point during this run up, and if you had held on without having any exit strategy, you would have had held on to this stock for many many years before it gave you back your capital. So the idea is that opportunity is important. The opportunity cost is important. And there's another example that I want to quote here is of Tata Elxsi, which has done really well in the past many years. You can see this entire journey from 40 rupees, or maybe even 10 rupees in the last 20 years. From 10 rupees it has gone to 12,000 or 11,000 maybe. uh, so almost 1100% gain on this one. 11,000 or maybe 10,600 or 11,000, I don't remember. But it has almost halved. It's gone down almost 40% from the top already in this small thing that we see here. But what is notable is that over this last 20-year period, 22 odd years period, it has made the gains in these three big moves. And each of these time of these big moves was 2.5 to 3 years. So in about 7 or 8 years, it has made all the moves, but the span has been 22 years. So 15 years of this 22-year journey was sort of in limbo. And had there been any mechanism to catch even 50, 60, 70% of these three large moves in a short span of time, you would have had that capital available to you to use elsewhere as opportunity cost. So that's the point I'm trying to drive here, is that while of course we don't know how far a stock will go, and all this is hindsight analysis, but yet just staying in the stock hoping that it will go up again one someday is also not the best strategy in my opinion, especially from a momentum point of view. So momentum basically will automatically discard stocks from your portfolio that are showing relative weakness in the universe of the stocks that you're following. So if you're following CNX 200 universe and 50 stocks are doing well, 100 top stocks are doing sort of neutral, and 50 stocks are doing worse, so at least you will be out of those worst 50 stocks. You may be for some time be in that 100 stocks that are sort of in limbo, but then the strategy will automatically push you towards the 50 stocks that are doing well. So relative strength is sort of an automatic way of getting you into the strongest stocks that are going to survive the market. And once you are out of those stocks, you have that capital available to deploy again into more stronger stocks or elsewhere. So that is the opportunity cost advantage that you get with momentum investing. So this is all the message that I had for today. Thank you so much for your time. Please do keep sharing these videos, and I'll see you in another one. And also one more thing, we are going to take a break on daily bytes from here on, and we'll join you towards the end of the year or maybe the first week of next year. So have a great one, have a great Christmas, and I'll keep sending the daily insights, but the daily bytes will remain off for the next couple of weeks. Thanks, bye.